Hello, I'm Neil Owen, the Group MD here at the Danos Group. Today I'm joined by Mark Moorby, who is our MD for our risk practice across the UK and EMEA region. It's good to have you here today, Mark. Mark has, in my opinion, a unique perspective across the recruitment industry. He has recruited for a number of specific verticals within the world of governance and has specific hands-on experience both recruiting and leading teams within Asia and back here in the UK. So maybe a good place to start, Mark, would be, what's your perspective on how the recruitment markets differ between your time in Asia and now being back in the UK?
I think that there is a difference in terms of maturity and scale in the recruitment markets. In Asia, you've got a number of smaller markets: Hong Kong, Singapore, Japan, as well as kind of Australia, China, and each one is more kind of focused on their local market. Whereas here, there's a wider focus across UK and Europe. There are more competitors in the market. There are more recruiters there. There's also more of a focus on recruitment process. I think that in a number of areas of Asia, across the levels that we recruit at, there's more relationship-driven hiring and closer HR relationships. When you get into the larger firms in UK and Europe, it is a little bit more transactional. A lot of the work we do focuses on the more senior end of the market. I think that it is still possible to build strong relationships and to have more of an impact in those areas.
We talk about impact. If we look at, I guess, post-pandemic, the majority of recruitment business, all recruitment businesses have been somewhat overwhelmed. And then one would sort of suggest that maybe this year that's changed a little bit with market forces changing somewhat. So if we sort of look at the specific trends that you're seeing within risk right now, if we looked at the industries that we recruit for, typically they have been investment banks and over the last few years a significant increase in our buy-side clients, but that's now augmented with fintechs and vendors and consultancies to the financial services industry. So specific to the world of risk, what sort of trends are you seeing with regards to the demand for talent?
I think within the larger firms, within the larger banks, there has been less of a focus on external hiring in the last year. There have been some senior changes within chief risk officers within large banking groups, but below them there's been a little bit more stability. A lot of those new people who've come in have not yet made any real changes to their team structures or department structures. So a lot of the work we've been doing this year has been more in the buy side, more in the challenger firms, where because they're smaller and they don't have the depth of internal talent, when people leave, they have to go out to the market to refill, whether that be a chief risk officer, SM4 position, whether that be a head of operational risk or investment risk. They've needed to go out and find people in the market, whereas on those larger banking groups, they've been able to either cover that internally with talent that they've got, moving people into those roles on a permanent basis, or in many cases doing that internally on an interim basis while they kind of wait to see how next year looks, how results look this year, and kind of come to the market at that stage.
That makes sense. And look, as you've gone through the industries there, you sort of led into some of the functional areas. Obviously, we segment our business very much into sort of quant and then non-quant risk across whether that be market risk, credit risk, and more recently operational risk and resiliency. From a functional area of expertise, where's the demand been over the last 3 to 6 months, and how's that shifted from this time last year?
I think that at the moment the biggest area of demand and seeing the most change is the operational risk and operational resiliency space. Those other areas do have hiring. There is turnover hires within firms. There's a talent shortage always in the more quantitative and analytical spaces, which mean there will be demand there. But in operational risk, we're seeing a lot more of a closer integration with compliance in a lot of firms. Firms often branding that now as non-financial risk and separating it from the financial risk piece. And that bringing together of departments will always create structural change, will create turnover when that happens. And then on the operational resiliency piece, that the kind of link between technology risk and operational risk, looking at third-party risk, which post-Brexit has become such an important consideration for people, both looking at their external third parties, but even intercompany third parties across the European-UK divide, has meant that they've had to go out and get new stuff in there. They're looking for new skill sets, people with regulatory experience to drive projects that have been in the pipeline for some time, but as deadlines come nearer in the next year, in Europe as things come to a head in the UK. There's a real kind of catch up going on from a lot of organisations, and particularly within the buy side on that side. A lot of buy side firms, their risk teams have just been investment risk, whereas now a lot of institutions are realising that they need to have dedicated operational risk. They might need dedicated operational resiliency teams as well.
And that links in with the change in regulations around DORA, is that right?
Yeah, with DORA coming in the EU and the UK set to also bring in those same standards. Business continuity has been in place for a long time, but the regulatory focus on it and the impact that's having has become much wider scoped than it ever was before, which means that becoming a regulated function, it's becoming something that is more in the sightline of the C-suite, and therefore the individuals working in that space need to be of a higher caliber. It's just got more of a priority for organisations now.
And you talk about priorities. Obviously, we're coming into the end of the calendar year. The seasonality around that can always be interesting within financial services, bonus seasons, budgets, etc. Use it or lose it hires. What sort of changes can we expect to see as we go into Q1 of the calendar next year?
I think that there are a number of initiatives that firms have had that have slowed down this year. I think that during the summertime there were things that slowed down during the summer that were expected to kick off, but new headcount has just been challenging in getting kind of final approvals, and there's been some stop-starts around some hires in that space, but there is confidence that they will move forward in the new year. Some of those larger banking groups that I mentioned earlier are starting to come back to the table as well. There's only so long you can cover resources internally, there's only so long you can use your internal talent before gaps start to open up and you need to come back out to the market. So I think that whilst we're not expecting it to go to kind of gangbusters hiring that we maybe saw 12 months ago, we are looking to see, I guess all the information we're getting from our clients is telling us that hiring will start to gather more of a pace into Q1 and particularly probably into kind of Q2 of next year.
Well, I guess that as a business, we provide a service to identify talent, but as we've said on a number of occasions, it's not just about finding the talent. Right now, the challenge from a recruitment business is about securing the talent as well. Yeah. When you're looking at recruitment processes, and whether that be time to hire or selection processes, anything new, anything innovative, anything that you're seeing in the market that the recruitment processes are changing?
I think that the processes are always changing between different firms. There are firms that have got that need to hire now, worried about you losing that headcount, and so they have kind of managed to speed up that process. But I think that one of the things that has been gathering pace over the last couple of years is that real focus on diversity hiring. And within that, I'd say really starting to look at the data behind it. I think that ourselves as a firm, we've made an investment in partnering with a technology partner to help us understand the diversity of all of our talent pools and the pipeline of people, and be able to talk to our clients more about what we're seeing in talent pools in the market and how that then reflects our shortlists and into our interview processes. And I think that that's something that's only going to increase. With financial services regulation coming in from the FCA and the PRA around gender targets within organisations, the ability to look at that coming to the beginning of your hiring pipeline is going to become more and more important.
Well, obviously, behind any recruitment decision, there's always the commerciality as well. Can you see that as businesses do get more, or are thinking about cost savings and or prioritising hires, potentially there can be that sort of situation where diversity falls off the radar? Any sort of insight into that?
I think that cost pressure is always going to be there for organisations, and particularly in the market we see that candidate salary expectations have continued to go up when organisations have been increasingly cost conscious over the last 12 months. I think when it comes to the DE and I piece, it is such a part of firms' DNA these days that I don't think that will drop away. I think that if anything, it's going to become more important, and that regulatory scrutiny about it, having to file regulatory returns about the progress you're making on your diversity characteristics within the organisation, is going to mean that firms will have to invest in making the right hires, as well as obviously paying a good attention to the inclusion piece and making sure that the good work they're doing in hiring a more diverse workforce results in those people succeeding within firms and really kind of adding value within those firms.
And with that, this can also link into employer branding, creating an environment where talent feels included and feels part of the vision of the organisation and the mission that business is on. Sometimes financial services businesses can fall behind that a little bit because they're so commercially focused. What are you seeing around how businesses are looking to attract the best talent in the market and really drive their employer branding to create the right culture?
I think that the kind of innovation piece is probably stronger in some of those fintech firms, the digital asset firms, the challenger banks. They're very focused on that employer proposition. I think there's been a change in how they're looking at benefits, the flexibility around work. Obviously, we've got some large banking groups that are looking back towards that 5 days in an office, whereas a lot of organisations are still looking at that real hybrid environment to try and get the best out of people having flexibility, whilst also building that team culture. And I think that that's something we can continue to see, that there will be a spectrum of organisations that will have different offerings. But I think that it is often the smaller agile firms that are able to more quickly offer different benefits, to be able to offer slightly different work environments, and look to use that to attract their talent into the organisations.
Makes sense. And I guess that we live and work in the UK, and I often say the UK can be one of the first geographies to talk itself into a recession. Obviously, we've had an economic situation where the economy's been bumbling along this year, but at the same time, we absolutely see job orders out in the market. Yep. And at the same time, while there have been some redundancies, as there typically are at this time of year within financial services, we haven't seen a significant amount of talent come back onto the market. Right, the talent pools have been pretty tight for the last 2 or 3 years. So if you're an investment bank or an asset manager right now looking for risk talent, is it going to be easy for them to find, or are they still going to have an open mind about the talent that they can get on the market?
I think there are still definitely challenges to hiring. There is an increase in talent in the market. Whilst there hasn't been volumes, obviously organisations have done restructuring. There are a few more people at senior levels, I think, open to opportunities now, who've been in roles for a number of years, or been in organisations for a number of years that are going through more changes and restructuring, which sometimes means they're more open to opportunity. But I think that the skill sets that we recruit are all quite niche skill sets, and finding those niche skill sets is always challenging for organisations. The ability to go onto LinkedIn, there's a lot of information out there. There are a lot of people out there, but I think that having relationships with people is where we can really add value to find talent that other organisations may not be able to find, and internal talent teams might sometimes struggle with. There will always be some roles that are going to be easier to fill, that an advert posted will deliver a volume of responses, but we're still finding that most of the roles that we're filling are done by the networks that we already have, by the relationships we have. And those people who may be open to opportunities now still really want to hear what's going on within the organisation. What is the risk agenda? What's going on at the C-suite? How's that impacting the hires that are being made? Where's the investment coming in? What are the growth plans of the firm? And they're going to do all of that before they consider applying for a role. And I think that's always going to be the case in the space where we are. And also, whether it be in risk or even across our legal and compliance functions, a lot of the people we deal with are quite risk averse. So, they want to make sure they've gathered a lot of information before they're going to put their hat in the ring for a new role.
Well, thanks, Mark. That's great to get your insight and perspective on what you're seeing both across industries and across the areas, sort of functional areas within those financial services institutions. So if you're a Chief Risk Officer looking to identify talent for your team, and or if you're a candidate looking for your next career move, it would definitely make sense to get in touch with Mark either before the year end or early in the new year. Thanks a lot, Mark.
Great. Thanks, Neil.